Hi guys, Les here from BG Trading. Hope you're well. And today I'm going to be talking about FOMO, fear of missing out. FOMO is one of the biggest challenges for any person in life, not only in the stock market, but have you ever heard about people just jumping into property market in Australia because the fear of missing the opportunity of buying at a affordable price, and then the housing market keeps going up, and they fear they're gonna miss it, but all of a sudden after they have a correction and they realize that they could buy 1 or 2 years later for a little bit better price. So same with stocks. Obviously the cycle is a lot shorter with stocks, but what we need to do is you need to understand when we're having FOMO, and once that is detected, we have to act immediately to ensure that we avoid doing some silly mistakes, which most of the time is buying the stock at a really higher price. So a lot of our members, they also are involved into other Facebook forums and Hot Cooper and all those forums, all bunch of people talking any sort of thing there, and they love those little rocket icon there when the stock start going up 20, 30, 40%, and they post that, oh, it's going 30%, going ballistic. But the truth is, you already missed the boat. So you have to wait that. The most you feel that anxiety of jumping the position, the stock is already like 50% above the simple moving average, which is, if you're following us, if you understand a little bit about BG trading strategy, is the price that you should be buying at. Okay, so all you need to do is you just gotta let it go, close your laptop and go for a walk. If that's necessary, just do that. But avoid FOMO into a stock that is overpriced. It is driven by the hype of the market. So what you need to do is, you just understand, you gotta wait for the stock to go down again, reach the SMA levels, which I'm going to be showing you shortly. And sooner or later that's gonna happen, and then that's when you jump in back into the position, only if you check the fundamentals of the company and you believe the company has a good growth potential. Let's kick off with the first example, Novonix. Remember Novonix, September last year with Battery Day? What happened is the stock started going up, and at some stage here, especially at the Battery Day, the stock's well above SMA. This is the share price, as you know, well above SMA, which is the red line. Okay, let's see, for instance, here, what happened was, some stage the stock was 62% above SMA. Okay, and what happened is, we buying that a stock which doesn't have a solid fundamental, solid revenue stream. What happened is, it's driven, the share price driven by speculation. It could fall, and that and didn't happen otherwise. It fell by 58%, 58% in a matter of 3 days. That was Novonix. A lot of people got caught out. So what happened is, what you need to do is, you just gotta wait. If the stock is trading too much, way above SMA, wait for SP to meet again SMA. Some stage, sooner or later, it's going to happen, and didn't happen otherwise with a Novonix. Exactly what happened here. So now again, we're in the stage that SP just in January with the lithium rally, SP was 200% above the SMA. It's way too much, so we won't buy around there, for sure not. So it's gotta wait. Sooner or later, both will meet, and then we're gonna be buying Novonix again when it happens. We're not gonna be speculating before that happens. Okay, so now look at this BrainChip, another example of how not to FOMO. Okay, why not to FOMO? Because BrainChip in August last year was trading. You see, like when it starts going up, you see those Facebook forums where the rockets are going to the moon. By the time you show that, it's already gone. You lost the opportunity. You missed the opportunity, guys. Just go make sure you protect your money. 300% above SMA. It's incredible, 300% above SMA. And look what happened. A few weeks later, this is just met here. And then that's when we could be looking at, you know, like you want to be buying when that meets or above or under, under. And now guess what happened? We made 29% a few weeks later, just right here. We missed this big jump here. We didn't care. Okay, we just missed it. But then we made 20% here. Okay, so then what we did then after, we did another entry on a brain chip right here, which made 38%. Now look at this. When we start buying at the top, so again, you FOMO. So you don't want to FOMO, wait for SP to meet SMA. This is the buying level, guys, B. Look at this, buying levels at B. So it's got to follow this strategy. Strategy always goes right because it at least helps you to avoid making mistakes of buying the stock at very higher price. Okay, you see the stock trading anything above SMA, you know that you should have bought already. Look for another opportunity. Okay, so then you save your money, you stay your both foot in the ground, because a lot of those stocks, the FOMO, they have absolutely no fundamentals. They're just purely speculative, and that's when people get caught out. Sometimes people lose most of the money just because they enter into a silly position based on other people on Facebook telling to jump in. So this is our inside of FOMO. If you feel like buying, if you feel that fear of missing out, just close your laptop, go for a walk, and come back next day. Okay, so just don't do silly mistakes. Hope that is valuable for you. Hope you enjoy it, and remember to subscribe our channel if you like. Thank you.